Daily stock market update on the 9th of December. The US Federal Reserve is going to make its interest rate decision tomorrow. For that reason, UK stocks are not moving much, and neither are US ones. So here in detail is more of what's going on, what you have to keep an eye out for, and what it means even if you're a long-term investor. So Treasury yields, government debt basically, and the interest you can receive by owning it has decreased somewhat. You know, I think, what the heck? Why is that important? Well, the reason it's important is because it suggests people are buying bonds, government debt. Why would they be buying bonds? And bonds, when they're bought, their price goes up, supply and demand, and the yields, the return you can get on them, decreases. That's how it works. Why would they be buying bonds? Because they expect interest rates to drop tomorrow, so they're locking in a higher return from the bonds today. The key point there being they're expecting interest rates to drop tomorrow. The reason that could be a little bit worrying is because now there's more chatter that the interest rate easing cycle around the world, from the Australian central bank to the UK one, might be coming to an end. That would make the market anticipate that it is going to end and therefore start punishing equity markets, because if borrowing costs led by interest rates become higher eventually, or just stabilize and aren't going to get cheaper, then we reevaluate the profitability of companies and we decide, let's get out of stock. So that's where we are at the moment on things. No reason to panic. It's nowhere near happening now. To some extent, maybe the chatter is there because there's very little else to chat about. Donald Trump has given NVIDIA the green light to ship the H200 chips to China. The price, a 25% surcharge. Could have made it higher. He could have made it 100%, doing the Chinese a favor. The reward, well, potentially billions in business NVIDIA had basically written off and didn't think it was going to be getting. The shares in pre-market, I'm speaking to you before the US, about an hour before the US markets open, in pre-market trading are barely budged. NVIDIA is a big company. China and this story, it's minor, and nobody wants to take a big bet before the interest rate decision tomorrow in any event. Google is getting punished by the EU. The EU always seems to be attacking the big US tech companies with the deepest pockets whenever the EU needs some money, because it can find them in billions. Now they're investigating Google for market abuse. Once again, this time in relation to its AI tools. If it's not its search engine, they'll go for the AI tools. They'll go for everything, because of course these are companies which have massive market dominance. So the lawyers get rich. If you're looking for a profession for the future, maybe think about being an EU law lawyer. What does that mean? Well, nothing for Google's share price or Alphabet's stock price. They get these all the time. They're already factored into the balance sheet that it's the price of doing business in that territory. Think of New York Mafia. If you want to work in that part of Manhattan, yeah, you're going to have to pay. You have to wet the beak of the Godfather. It's one way to look at it. What about Netflix? Okay, this is good news for the market. Mergers and acquisitions are good news when money's circulating in the system, all very good. That deal hasn't gone through. Netflix's purchase of Warner Brothers has now become a great little soap opera. Paramount is going to offer $80 billion compared to Netflix's $50 billion, but Paramount wants the whole shebang. It wants everything out of Warner Brothers, whereas Netflix only wanted more of the streaming business. Is it going to go through? Isn't it? It's going to make a great story, probably on Netflix, about the whole takeover, because you've got Gulf sovereign wealth funds involved. You've got the US president's son-in-law involved. You've got one of the president's biggest donors, Oracle, the founder and major shareholder of that, son involved. He's the CEO of Paramount, the Ellison family. So lots of exciting stuff there. But does it make any difference for us and the stock market? No, it doesn't. All it's telling us is there's mergers and acquisitions going on. There's a lot of money sloshing around. These cash piles that these companies have they want to deploy for acquisition, because there's only so much you can spend on NVIDIA chips, which is the other area that everybody's working on. UK and Europe, what's moving? The FTSE 100 fairly flat. Rolls-Royce BAE Systems leading again because of the massive German defense order book. Germany is unleashing 52 billion euros on defense. It's set to approve a record 29 procurement contracts next week. This is Europe rearming. It's their largest rearmament, I think since 1939. So that is leading to Rolls-Royce, BAE Systems doing rather well. British American Tobacco, it's a bit of a drag at the moment. You get the connection with cigarettes, don't you? The guidance has been 2026 looks weak. Yeah, well, I don't see anybody moving into buying more cigarettes unless they're getting into new overseas markets or penetrating even deeper into China. WPP, the ad agency, bouncing back because its Wavemaker unit landed a £1.5 billion UK government media contract. I know what you're thinking. Wait a minute. Where's the government getting all this money from? £1.5 billion for a media contract? Not for hospitals, mind you, but for media. Yeah, there's always money to be found for publicizing information. So they're doing well. FTSE 250, yeah, you've really got retailers and some financials outperforming. When we set up the hedge fund 20 odd years ago, we couldn't invest in FTSE 250 companies because even a small fund like ours would move the market because the daily volume was so low on FTSE 250 companies. That's the 250 largest after the 100 largest. So not exactly exciting territory there. And that means they tend to be more volatile. So if you really like your risk with sugar on top, yeah, fine, FTSE 250. UK consumer data, pretty bloody miserable. The UK consumers are not spending, perhaps. Barclaycard shows the sharpest drop in credit card spending since 2021. I don't know, maybe everybody bought their Christmas presents earlier, but it looks like they're just not using Barclaycard. Food inflation is stuck at 4.7%. Households are trading down everywhere except, premium own label groceries. Think Waitrose own brand. So the rich are fine, but for everybody else, that credit card spending is not holding up. That's not good news for the UK economy, yet the stock market's at all-time highs. That disparity can't remain for too long. Sooner or later, the real economy catches up with the stock market economy. In terms of commodities, oil, $59. It's pretty much stuck. It's a range it's been in. It's stuck at the bottom of that range, so expected to start moving a little bit higher. There is concern of oversupply. Maybe the world isn't growing as much and as quickly as we thought. If interest rates stop falling and growth gets dampened and the consumer stops spending, maybe 2026 becomes like 2022. We'll keep an eye out for the music on that and make sure, like musical chairs, we've got a chair to sit on if the music does stop. Gold at $4,205. Interest rates, caution. It's certainly not plunging. Copper, all-time highs. It's consolidating, going sideways. It looks like everybody's on vacation, I guess, at the moment. Crypto, Bitcoin just above $90,000, a little bit weaker, just noise, nothing, no major movements for us to keep an eye on. So the US Federal Reserve or central bank show, as I mentioned, we're all waiting for that tomorrow. The futures contracts are barely budging. It's like the day before Christmas Eve. You're just, tomorrow's a half day and the day after's Christmas. What's the point of taking any big bet? What is expected is a 25 basis point cut. Whatever happens, whether they don't cut or they do, you'll get some volatility. It's noise. Don't worry about it. Wall Street actually fears a hawkish cut, or the type which would be one and done. The final cut. So the director's cut. So by that, what I mean is a cut of maybe 1%, 0.5%, so double the 0.25%. Now, the fear there is if it does that, then there's no future further reductions. Options markets are prepared for 0.7% swing either way in the S&P. So almost a 1% swing either way if you look at the options market. Corporate news, like I said, Nvidia geopolitics, Google's EU headache, an escalating war for Warner Brothers. That's the corporate news. The chitter chatter is that interest rate cycles might have ended. Australia starts hiking in June. Nobody cares, but that gives us an idea that other economies might be bound to do the same. New Zealand, from fully pricing cuts to now pricing hikes. European Central Bank, one of them have said they're comfortable with market bets that the next move is a hike. Japan expected to raise rates next week. Canada on hold for now, but hikes almost fully priced as well. So there's a few worries that we might be getting near the end of that cycle. Now, this happened in 2022. January 2022, those rate hikes were the fear, and you start getting the market dropping. Also, if I remember correctly, 2018, the back end of 2018, and you had a sharp sell-off in the markets. Okay, so this is what Oxford Economics said. A strong signal of an extended pause could leave investors disappointed. Short-term noise either way. For the moment, still bet on further cuts. The worry is between the translation that if Chairman Powell, the head of the US central bank, is effectively saying we're done cutting. That's what we're looking for. We're done cutting. Now you might say, wait a minute, what does this mean for our pension and stock markets? At the moment, nothing bad at all. Now, I have a short request for you. If you do like these daily updates, and I think many of you do, then don't forget you can get a free copy of my book published by Palgrave Macmillan. Just go to campaignforamillion.com. So it's on there, but so that's free. So between the daily updates and the free book, I have a small free favor, which won't cost you anything, to ask of you. Please save this video if you're watching it on TikTok, or share it if you're on YouTube. Those trigger items for their algorithm means it gets shared to more and more people. The more people it goes to, the more views I get. If I get more than 3,000 views, I'll continue doing them. Okay, it's as simple as that, because I think that's fair enough. There's no point me wasting my time speaking to an empty room if people don't want it. It's the most democratic thing I can do is just have you vote. And the best way you can vote that you want these is on TikTok, either save or do all of these. Save, like, repost on your own page, show your friends how clever you are, that you're reading about macroeconomics and global politics. Share it with friends. Post it on your TikTok story. Similarly with YouTube, please like it and subscribe to my channel. Those two things push this out to a bigger audience. The bigger the audience, the more it's worth my while continuing to do these. And jointly, both of us are thereby educating more people on investing and the stock market, which can only be a good thing. So let's do some social good. Pay it back, pay it forward, call it what you want. Thank you very much for your time on this. I look forward to speaking to you a little bit later on. I've got some big announcements coming, and I'll post at least one of them later today. Thank you.